My name's Jodie and I'm from Northwest Accountancy. And as the tax agent, my role is to educate and make your tax easy. So today's topic is about the main residence exemption when you're selling your home. Now, the main residence exemption is a tax exclusion. So essentially, you don't need to pay tax if you sell your own private home. This is a really simple explanation because as soon as you buy your own home and you move into it straight away and you live in it and then you sell it, all those conditions apply and away we go. No tax to pay. We do still need to put on your tax return that you have sold a property. So it is a box we need to check because the tax office gets information now from the Land Titles Administration in each state that says you've sold a property. And so if you don't put on your tax return that you have sold a property, you could get flagged for an audit. So please make sure you fill out that box and say or advise us and let us know that yes, you have sold a property, but it is your main residence. And so there's a little indicator box in there that we can say, yes, I've sold a property. Yes, it's my main residence. Okay, so things start to get complicated where you've potentially rented that house out or had earned some income from that house. And those things may create what we call a partial main residence exemption. So instead of it being a full exemption for the whole period of time that you've owned the property, you may have to pay tax on a part of the property if you're making a sale. So there's a whole load of different criteria in respect of main residence and partial main residence claims. So I'm just going to run through them briefly so you're aware so that you can talk to your tax agent about that when you do your tax. Okay, so the first one is you have to live in the property from the first day that you own it or that it's able to be lived in. So if you build a house and move into it once it's done, then that would be classed as your main residence from the date that you started building. Let me check that rule though. So when you move in, that's your main residence. So if you have no other main residences, so this is the second part. If you have no main residences at the same time as you have the house that you're living in, then that is your main residence. Now, if you've had one property that you've lived in, then you've moved out and potentially renting that property, and you've moved into another property that you own, both of those properties can be your main residence. You don't need to choose which property is your main residence until you go and sell one. So this can be really helpful from a tax planning point of view. So in order to claim the main residence, you have to live in it straight away. So be careful if you buy a house and it's already rented by somebody up until maybe a month or a couple of months later. That period of time that somebody else is living in it and you're receiving rent for it is taxable period of time. So please keep your records when you buy your house as to whether it's being rented. Obviously, this rent needs to go into your tax return as well, so copies of your tax return will help. And then, so that period of time, out of the whole period of ownership, you'll have to pay tax on. So just be aware if you're buying a house and you can't move into it straight away, like on settlement day straight away, not because there's tenants in it straight away, then there could be tax later on when you actually sell that house. So there's another partial main residence. Now, the other thing to think about or understand is the 6-year exemption rule. So if you've purchased your house and moved straight in and it is your principal place of residence or main residence, the terms are interchangeable, then after you move out, and if you move out and rent it out after that, you're allowed to have up to a 6-year period of absence where you can still claim that property as your main residence. excluding the bit I said before around having two main residences at the same time. So the 6-year rule is really handy because you can sell that property within that 6-year period and still not have to pay tax on it, even though you've rented it out. So yet again, the rent still needs to go in your tax return as income for each year, but you may be able to sell it tax-free or partially tax-free if you've owned it and rented it out for more than 6 years after you moved out. So with your main residence, even though it is your own home, it's not tax deductible or claimable against your other income while you're living in it, you still need to keep all of those records around purchasing, any rental information, and then the dates that you moved in and the dates that you moved out, so that we can easily calculate your capital gains tax liability, if any. Anyway, that's a very quick overview of your main residence exemption. So the timeline is important: when you bought it, when you moved in, when you moved out, and then also the other capital gains information as well. So how much you purchased it for, how much you sell it for, all of that information is handy to have when you're having that discussion about selling your own home. Hopefully that was helpful. And if you found it useful, please like, share, or comment if you'd like any other videos or any clarification on this video, because I want to make tax easy for you. Thanks for watching.